There's a ton of myths, fallacies, or just common misconceptions that get thrown around when it comes to buying a house. Whether it's something that we heard from our parents growing up, something that we read online. So I wanted to hop on and record this, set the record straight. From my experience, week in and week out, there are three main, oh, I didn't know that, or I always thought it was this, that I hear. And I believe in today's market, number three is the biggest sideliner keeping potential home buyers from purchasing their first home. We'll start with one of the most common misconceptions out there, and actually one that I believed before I started working in this industry. You need 20% down to buy a house. You don't. You can put 3% down, 3.5% down, 5, 10, anything in between. Depending on your scenario, there's gonna be a program out there for you that fits. Now, the difference between 3% and 20% isn't a couple $100. This is tens of thousands of dollars that we're talking about. That's the biggest difference between buying a house this year and buying a house within the next 5 years, if at all. So when it comes to the actual numbers, I'll break these down in a further video so you can see real life scenarios, but the premise remains the same. Protect your money. You're gonna need money for furniture, you're gonna need money for an emergency, you're gonna need money for projects. So when it comes down to it, this is your largest financial asset. You wanna make sure that you're not going house poor on day one. Myth number two, I need an 800 credit score to buy a house. You don't. Most of the loans that I close are in the 600 to 700 range. And shoot, we have programs as low as 500, depending on your scenario. Now, don't get me wrong. Someone who has a higher credit score is gonna get better terms. The borrower with a 780 score versus the borrower with a 620 score is gonna have a lower rate, they're gonna have a cheaper rate, and they're gonna have cheaper mortgage insurance if all other factors remain the same. But don't let that discourage you. The difference between I can buy a house and I can't buy a house, it's not 800. Normally it's nowhere close. A lot of times I'll see someone take a look at buying a house last year, 2 years ago, and their credit score wasn't where they wanted it to be. So they put it on the back burner and again, 1 to 2 years goes by. Where what we can do is run what's called a safe check or a soft pull, see where your score is at. Typically it's gonna be higher than where you think it's gonna be. And if there's factors that we can help improve your score, normally that takes 30 to 60 days, sometimes even sooner. So don't let someone telling you your score is not where it needs to be. Don't let an app that tells you, hey, this is what your credit's at, don't let that be the end all be all. Let's hop on the phone, let's take a look at some programs together and see if this makes sense now. Myth number three, the biggest sideliner. I'll wait for rates to drop. You wanna know what happens when rates get lower? Every single buyer who's sharing your same sentiment comes crawling out of the woodwork and sellers start licking their chops because they know that it's a seller's market. That's when you see bidding wars and offers going for sometimes tens of thousands of dollars over the asking price. But let's say you do it. Let's say that you win on the rate, you lose out on the price. That price sticks with you for the life of the loan. It's what your loan amount's built on, it's what your equity is built on, where if you control the rate up front, you always have control of that throughout the process. You can take advantage of a better situation once rates drop. As rates drop, home prices naturally appreciate because there's more demand. More buyers are crawling out of the woodwork. So if you get into the house, rates get better, those costs you can finance into your loan. You're not coming out of pocket, you're controlling your price point and then taking advantage of a better situation. It's a very common saying in our industry that I want to get tattooed across my forehead. Date the rate, marry the house, because of what I just laid out. You have full control once you have the home. Don't wait on the market. You can't time it. This is something that you can lock in today and take advantage of a better situation down the road. So, 3 things. You don't need 20% down, you don't need an 800 credit score, and you don't need to wait on the market getting better. 3 things that are probably keeping you or someone that you know on the sidelines right now from home ownership. So if any one of these is sitting between you and buying your first home or buying your next home, reach out, DM me. You can find me on loansbyluke.com. You can DM me on any of my social platforms, but let's run some numbers. Let's actually take a look at this and see if it makes sense or not. Thank you for the continued support. Remember to follow, subscribe, like, share, do what you got to do, but I'll see you in the next one.